In this video, traders, we're going to look at how to fight the urge to get involved with the volatile market. Stick around. Hey traders, a warm welcome to you. Alright, so do you feel like this? You're trading, or you're about to trade, or you're sitting in front of the screens, or you're just a trader and you see things like, wow, the market, the Dow's up 800, the Dow's down 800, the market's moving the most it's ever moved, it's at new highs, we've had the biggest point drop ever, we've had big moves, it's carnage out there, there's blood on the streets, there's panic, there's this. You see these big candles on your daily chart and you think, I should be killing this. This is the type of environment I should be killing. I love volatility. Everyone says volatility is great for traders. I should be killing it. And your mind wants you then to press and get involved. You think this is a great opportunity to trade and you want to get involved and you believe this should just have money flowing into your account because the opportunity is there. Now listen, in theory, that's great. Right, in theory, the volatility is fantastic. You know, we want volatility because what volatility means is number of occurrences of our setups. And the more occurrences of our setups, the more likely we are to make a profit. And also, the more likely we are to have a trade run on and on. However, I used to be really kind of, yeah, the market's moving, I want to make money. And when I look back, actually, you know what? The biggest money isn't necessarily made in the most volatile times. The biggest money comes in with the normal markets, the markets that you're prepared for, the markets that hit your level, bounce off, you get a great trade, you hold it, you get a run, you get a trend day. Those are where the money comes in. Now, volatility is great, but the thing is, guys, you have to kind of put yourself into perspective and go, I don't need to look at this and think that I should be smashing it. I need to be looking at the markets and saying, here's an over a period of time, am I, number one, staying safe? So these can encourage you to trade, these heavy markets can encourage you to trade and get your face ripped off and undo a quarter's worth of work if you're not careful. So number one, you know, staying out is not an issue. And it doesn't matter, number two, it doesn't matter where you make your money. It doesn't matter if you're making it in the volatile market or you're making it in the day-to-day, testing levels, bouncing off levels, having the occasional trend day, rotational day, with a range expansion, all that kind of stuff. It doesn't matter where it comes from. So try to avoid the urge of feeling that you should be killing it in these markets. I know that it'll be there. I recognize that you'll be like, you know, I'm a day trader, I'm an aggressive trader, I'm a short-term trader, I should be smashing it. But it doesn't matter if you're not. The number one priority is to stay safe. If it's moving quick and you're like, it's moving quick, I don't want to trade it, then don't trade it. Just watch and learn. It's a great learning environment. Or you feel a little bit more confident, then by all means trade it with smaller size. Your stops are going to be wider anyway. You can't carry on with the normal stop. All this does is basically widen the noise level. You think you can get away with a 10-tick stop in this kind of market environment, you're just going to give money away. So you're still going to have to do a smaller size anyway. But then you give the opportunity is potentially there. But if it's not, and you think, well, this is not the kind of market I'm used to. The levels breaking through levels. The conditions are different. The kind of the way it's structured, the trade is different. The way it's moving, the flow is different. Then don't trade it. Don't feel like you have to trade it just because it's moving. Because listen, guys, the media is giving all this. Wow, big moves, volatility, markets in turmoil, all this stuff, and we just feel that's where we should be killing it. And it doesn't necessarily have to be the case. Yes, you may well place a few trades in it and make a lot of money out of it, but it doesn't matter if you don't. What matters is the longer term game. And honestly, if someone said to me, hey, you can make a lot of money in volatile conditions or you can make a lot of money during normal conditions, I'll take normal conditions all day, every day if I had to pick between the two, because normal conditions are the majority of the time. You know, 98% of the time are our normal conditions, i.e. ranges going expanding, contracting, range-based days, narrow days, outside days, gaps, all this kind of normal stuff. These extreme volatility happens so rarely. And yes, there are some traders who will capture it and will make a lot of money, but then a lot of traders will go, listen, it's just not my thing. I don't want to trade it. I like volatility, but to a certain extent, when it gets too much, I've got to be careful. I've got to dial down my position size and I've got to trade it. And ultimately, I know I'm going to make a fortune at it because I've dialed down my position size to allow for the increase in noise. And so, you know, just what I'm saying, guys, is don't beat yourself up. I know what it's like. You think, you feel that you should be absolutely smashing it when the market is moving, it's volatile, but you don't have to be. The important thing is, again, keeping capital protected. That's the number one thing. Without capital, you can't trade. So keep that, protect that. The second thing is, it's how you perform over a longer period of time. At the end of the year, when you've got your P&L statement, it doesn't matter where that P&L's come from. If it's come from quiet days, one volatile day, whatever it may be, the P&L is still going to be the P&L. Don't get extra brownie points for being a hero and trading volatile conditions when really the volatile conditions don't suit you. So don't worry about it. Forget about it. If you want to, listen, we love trading. We love the markets. Sit back and don't give yourself the pressure. If you feel that pressure, like I should be making money, just watch it. Just enjoy the price action back and flow, because it's a beautiful thing to watch when it's volatile, right? It's crazy, it's moving, its direction. You can learn something just by watching. You don't have to be involved in it if you don't want to be. But on the other hand, if it's working for you, volatile conditions work, then great, press it, press it, press it, press it. But this video is for those of you who look at it sometimes and feel like I should be making loads of money, I should be doing this, I should be killing it, and I'm not killing it. Why am I not killing it? Doesn't matter, forget it. Focus on, go back to your setups, the normal setups and normal market conditions. The conditions will come back around again, and then you can get back into your groove. And you can look back on that little scenario and go, hey, that was interesting to watch. That was fun to watch. But you've survived another day, you've carried on, and you're going to continue with your upward curve and your equity. What you don't want is what a lot of traders will do, is they'll have blown up in this volatility. They'll have seen it moving and think, this is my opportunity, here I go. And they end up trading for an emotional state, losing more than they expect, and unfortunately struggles come back from that. So don't worry about it. If the market is swinging, you're seeing all this, you feel like you should be killing because volatility equals money, doesn't necessarily always all the time. Just keep that capital protected, keep your risk managed, and I'll see you in the next one. Take care. Bye-bye.